Hey guys, what's up? This is Francisco with Valareso Capital, and in today's video, we're gonna do the weekly watch list for the first week of October. It's gonna be October 3rd. Remember, guys, that this video is for informational purposes only and is not financial advice. Now, what is really interesting about October is that October tends to be a month in which we see a lot of kind of the ending cycle of bear markets. It tends to be a famous month for that. However, given the policy that we have now for the Fed, and if you want to know a little bit more of a deep analysis on that policy and on what is the chart that I'm looking at, you can take a look at my market update video, in which I go deep into what is currently the cycle that we're in and what I'm seeing in the chart of the interest rates in relationship to momentum, trend, and also the Nasdaq composite. So you can take a look. I'm gonna link that video below this. I'm gonna link the market update video below this video so that you can take a look at it. Now, given the path of least resistance right now, which continues to be to the downside, all of the setups that I'm gonna share with you are gonna be short setups. I'm looking at uranium, I'm looking at crude oil, and then I'm looking at XOP. I'm taking a look at Snow, Tesla, and we're also gonna take a look at EMPH. For uranium, we're gonna take a look at CCJ, which is the first chart that I'm gonna share with you in this watch list. You can see CCJ right here. This is trading view. And for anyone who's new to the channel, I have three indicators that I use. The first one is the trend oscillator, which is a momentum indicator, and you can see that this one not only the momentums but also looks at the structure of the momentum, which is basically like looking at the structure in price. And if you have been following this channel for a while, there's something that I always say, and that is that momentum changes the structure way before price. So it's really important to see what is the structure of momentum, because that structure of momentum tends to move before the price. Then I have the TTM squeeze. This is the Squeeze Pro developed by John Carter, and this indicator helps me identify moments in time when the price is contracting and there's a high probability for expansion in price, and it also helps me to identify what is the momentum in terms of the price of any security that you want to trade. And then finally, the indicator that I have in the bottom basically is just a multi-trend indicator, which helps me identify what is the current trend based on the structure of the moving averages. In this case, I use the 8 exponential, the 21 exponential, and the 13 exponential. So if the 8 is below the 13 and the 13 is below the 21, then I will have red dots, meaning that the structure of the moving averages is negative, and we should focus on the path of least resistance, which is to the downside. So let's start with the charts here. As I say, first chart that I have is CCJ, which basically is kind of the stock that I trade when I'm watching uranium. And you can see right here, we're gonna keep it super simple. You can see right here that we have a squeeze. The squeeze is pointing lower, which means that there's more momentum to the downside. You can see that the squeeze is starting to fire, which means that that expansion of momentum is actually getting released. And we tend to start to see a strong continuation in the direction of that momentum. You can also see that the moving averages are stacked negatively, and you can see that the 21 is starting to act as resistance in price, and that 8 exponential, which is the yellow moving average in my chart, is below the blue, which is the 21. So it means that the path of least resistance based on the structure of the moving averages is also negative. And this is my favorite part about the chart. You can see here's the structure of momentum, and you can see that we broke below this structure of support, and that's why I have a sell signal on my charts. And you can see that right now momentum broke, kind of went sideways, and now we're retesting that support, which is now becoming resistance in momentum. And what is pretty interesting, you can see that this 2715 level also acted as support in price, and now it's starting to act as resistance. So that gives us a high probability setup, thinking that we're probably going to break from this kind of wedging pattern and we will continue to move to the downside, and that's exactly what is happening in momentum. And I'm waiting for some continuation in CCJ to the downside. I think that if you want to give this a lot of room, you can probably use this level right here as your stop. I'm probably targeting these levels all the way down here for your potential targets in CCJ as a short setup. So this one is looking pretty nice to the short side. The next one that I'm gonna share with you is USO, and you can trade this one. You can trade this one bullishly by using SEO, which is the inverse leverage ETF for crude oil. So I think that one is pretty interesting. And let's go through this setup. You can see right here that I already have a sell signal that continues to be active. And you can see just the structure of momentum, right? You can see right here the structure of the moving averages is negative. You can see that the squeeze fired to the short side, and you can see that the momentum is below that zero level. So that means that we have more negative momentum than positive momentum, or more bearish momentum than positive momentum. And you can see right here, if we take a look at price, you can see that we got rejected at the 21 exponential for the second time already. That means that this is starting to trend. And if we take a look at price structure, you can see that we had a very important level somewhere around the 70 level here. And finally, after all this distribution, we are finally starting to see some directional moves in USO, and that directional move is starting to trigger to the downside. In terms of my trend oscillator, you can see that the trend oscillator is making lower lows and is also making lower highs. So that means that the trend oscillator, in terms of structural momentum, is also trending to the downside. And then in terms of price, you can see that we broke below the 67.49 level, that we tested it, and now we're starting to get rejected as well. So everything is pointing for lower prices here in USO. I think that if you just set a stop somewhere around the 70 level here, you're going to give it enough room for it to wiggle a little bit. And then I'm going to be looking for more continuation to the downside, probably all the way to a retest of this previous base, which comes basically somewhere around 57.50. So I'm going to be looking for a break all the way below here. You can set your stop here. That's going to give you a pretty nice risk reward. I think that the closer you get it to 67.49, the better risk management you can use in this strategy as well. So USO looking bearish, looking pretty good to that for more downside. And then the next name that I'm going to show you is XOP. And if USO is looking bearish, then XOP most likely is also looking bearish, and that's exactly what's happening. You can see right here that the structure of the momentum, right? You can see right here that the structure of the momentum is negative because we have the 8 below the 13 and below the 21. You can see that we have a squeeze that is firing to the downside. And what is also important is that the structure in the trend oscillator is also bearish, which is awesome. You can see right here that we continue to have lower highs, and we continue to have lower lows in momentum. And right now what's happening, which is pretty interesting, is that we broke below this low of momentum, and now we're retesting that low. And that coincides with price testing that declining 8 exponential moving average. And if this pattern right here, what it looks to me is that this is starting to wedge to the upside, right? This is basically, you can call it a rising wedge, a bear flag, right? You can see the pole right here. If this pattern usually tends to trigger to the downside, especially when everything in our indicators is pointing for more downside. I think you can manage it using that 21 exponential as your covering guide for the short position, and then looking for more downside. And perhaps this is going to take out these lows and continue to move lower. So this one is looking pretty nice also for a short setup in XOP. Next one that I want to show to you is Snow. And I know there are a lot of bulls in Snow, a lot of people who love this stock, and this one is actually kind of trending, right? You can see right here that it tested that 50 daily multiple times and bounced. You can see beautiful bounce here, beautiful bounce here. Tested the 21, beautiful bounce here. However, what I'm starting to see is that we kind of have a retest of these highs right here, but the momentum is starting to go lower. So that is what I call a bearish divergence, and this usually tends to be a really good indication of what we can see as a double top. Of course, that double top is going to confirm the moment that we actually break the lows and we continue higher. Now let's take a look at the setup and why do I think that this might continue to the lows, to continue to trend to the short side. You can see that the momentum, right? We had a pretty strong bullish momentum in terms of moving averages, and now that momentum is starting to break. You can see it right here in my dots, because I have red dots, meaning that the 8 is below the 20, below the 13, and the 13 is below the 21 exponential. You can see that we have a beautiful squeeze that is starting to show to fire to the downside. And then also you can see the momentum structure is starting to break as well. So you can see right here that we had this support somewhere around the test of that 21 exponential. You can see that we broke that support, and now we're starting to retest it. What is also interesting is that price tried to tag that supply level of 179.93 and actually got rejected pretty hard. You can see the selling candle, how it closed near the lows of the day. So my expectation is actually that this 50, which is this purple line, is not going to hold. So I think that if you get it pretty close to this 179.93 level, is going to be a great place to manage a position, and then continue to look for lower prices in snow as well. And then for the last two names that I have Tesla and EMPH. Let's go with Tesla first. Tesla, right? This one is actually a pretty easy one to look at. You can see right here, you can see that we actually had, basically, you can see the kind of the triple top that we had here, but you can see momentum was going lower. So Tesla was retesting those highs, but the momentum was already trending much lower, which suggests that Tesla is going to break at some point. Now you can see right here that the structure of the moving averages is starting to turn negative. You can see that the momentum in the squeeze is starting to go below that zero line, and you can also see right here that we're starting to break below these lows of support here. So usually momentum breaks before price. You can see that price is trying to hold, but momentum is already breaking lower. I think that you can short Tesla here, but I think that the best way to manage this position is if we happen to get if we happen to get kind of a bounce on Monday, and Tesla bounces into this declining 21 exponential, and you can get momentum to retest this support, this resistance level, I think that would offer a great opportunity to short Tesla for lower prices. I think that at least a fill of this gap somewhere around 247.50 is going to be a target. And the best way to manage this position is to get it as close to the supply level, which is 290.40. So if we happen to get a bounce in Tesla that comes into that decline in 21, I think it's going to be a great opportunity to short this name. And you can also see that we got some resistance, some support in this 50 daily moving average, and now we're starting to get some resistance. So that means that we're changing a structure in those moving averages as well. So this one is looking pretty nice for a short position. And then finally, EMPH, you can see that momentum already broke to the downside. We have a squeeze. And so let's start to go to the charts. You can see the price was going higher, momentum was going lower. You can also see that on the momentum of the squeeze. And if you want to take a look at the structure of the moving averages, you can see that the structure was pretty bullish. And now that structure is starting to change. You can also see that the momentum in the squeeze is negative, is going below zero, and when we get these gray dots in the momentum in the squeeze, that means that it's trying to fire into the direction of the most recent momentum bars, and those momentum bars are below zero. So that means that it's trying to short to the short side, meaning that bearish positions should be the focus on this setup in particular. And you can see that price is trading below the 8 exponential, below the 21 exponential, and now we're also below the 50 daily moving average. So you can see momentum right here. The momentum already broke support, right? You can see, and this is the beauty of this indicator, right? Because you can see that price continues to hold the support, but momentum already broke below that support. So my expectation is that if we happen to get any kind of bounce Monday into this supply level of 294.80, I think that the close you get to put your position to this level right here, and we can see, and we can get momentum all the way to resistance, I think that we're going to get decline. And then we're probably going to see a close of these earning gaps that we have all the way down here to 216.10. So that's going to be my primary target for this setup. And I think that if you use If you use 300 as your covering guide, I think it's going to be a really good covering guide, or perhaps somewhere above the selling candle right here in this chart. So as you can see, all of the charts are for the short side. I think they're pretty high probability setups based on the structural price, based on the structural momentum, and the structure of those moving averages as well. So keep these names on your watch list. Let me know if you have any other names that you want to take a look at. Remember, guys, to like and subscribe, and also follow me on my Twitter account, which is @Valareso Capital, in which I share most of these setups on a daily basis. So thank you so much, guys, for watching, and I'm sure that this is going to be helpful for you. Let me know if you take some of these trades so that we can connect on Twitter as well. Thank you so much, guys, and bye bye. Peace.